Inside the service, in this month's video, we described a lot of different institutional analyses on the market, and one of those was the hawkish FOMC forecast going into the long run, past 2026. In other words, what happened with the FOMC didn't crash the markets. The crash of the markets, or the flash crash, was due to something else entirely, and it was telegraphed days and days before it actually occurred. In the coming years, we're also expecting weaker employment and also weaker growth. This means that it's going to be a trader's market. This is also a video from inside the service for this month. The reason that we need to do the cheat sheet is because the major moves of the institutional players are always hidden until they occur. The cheat sheet will give you an understanding as to how the market is actually moving. Price movements are not random. And you'll see from the homepage of CTKSmethod.org, the cheat sheet is absolutely free. And there are a number of videos here to help you to fill it out. The culprit behind the sell-offs is not the FOMC. The FOMC was known, and it was known by institutional players for some time. We also knew that that was the case, that rates would be held higher for longer, a more hawkish Fed, as you've seen from the previous video from inside the service. One thing that you need to understand is that when the VIX spikes up, this is the fear gauge of the main market. And when fear comes up, what do people do? Well, the prices go red and people sell. The blue line here is Bitcoin's price. We can see in past occurrences of the VIX spiking up substantially, we've had negative momentum inside Bitcoin until the VIX tops. When it tops, we're just looking for a bottom and to ride that out. One thing that we can see right now on the VIX, it's not stopped its upwards ascent. What you will see from the headlines is the VIX came up, let's just make it really easy. Say the VIX came up 100% and then it reduced 10%. It's still up 90%. This is not a sign of the VIX decaying. When you get big spikes like this and big decays, okay, that can happen. But we're not looking at that right at the current time. In this video, we'll go through the cheat sheet and I'll seek to explain to you what you can look for next and what could be happening not only to your crypto portfolios but to your stock market portfolios as well. Let's run the numbers. Financial markets often get stormy. Professionals need to assess market direction and market momentum to make sure they don't get caught on the wrong side of the trade and the wrong side of the market. The free cheat sheet from CTKSmethod.org is the fastest way to stack probabilities just like professionals do. There are 7 rows within the cheat sheet. Row 1 and row 2 measure risk. Row 3 and row 4 measure global stock market, health and retail sentiment. Row 5, 6 and 7 measure the new digital economy of money, the crypto market. These 32 charts, combined with CTKS structural indicators and monthly price paths, are a game changer. You'll gain confidence to know where the markets are heading and where they're getting weak, which often means the difference between outright fear and opportunity. Let's run the numbers. Available completely free of charge is the watch list from the CTKS Method service. This measures all the different rows and also gives you some really good tickers that you can look at to cross-reference. This is row 1, risk. We've seen the VIX did come down, but it spiked tremendously. The dollar is still going up at the current time. Row 2 is all about junk bonds, the euro dollar, the Aussie dollar. I'll get into the particular charts underneath these things, but we can see that there is pressure on row 2 at the current time. The major global stock market indices in row 3, they're coming down with the exception of the Dow, which just eked out a very modest gain. When we look at the references to row 3, these are the futures. So for example, the S&P 500 futures and the NASDAQ futures, they're coming down at the moment. The Dow is just marginally up. The Russell is down, the DAX is down, the Nikkei is down, the Hang Seng is down, and the ASX SPI is down. We're seeing negative price momentum across the major market indices. When we look at row 4, which gives us the understanding as to what the major indices are doing, underneath the hood, we saw a bit of a kick up in Apple, Tesla, Microsoft were hit, as was MicroStrategy. MicroStrategy was hit really hard. Nvidia came up. Inside the crypto market, we saw in row 5, the major market index, which is total crypto market cap, came down. Bitcoin came down and Ethereum got whacked. Market cap, USDT dominance in row 5 references. This just gives you an idea. Are people, it's kind of like a VIX for the crypto market. Are people shuffling their money into USDT? Now remember, the MiCA regulations that are coming out in Europe will ban USDT. That could be a pretty interesting time, so please be aware of that. Total crypto market cap excluding Bitcoin came down, excluding Bitcoin and Ethereum. So this is all the alts, that came down as well. And the top 10 all came down. When we look at row 6, and these rows inside the service are done with structure, and the structure is vitally important to your understanding. We can see all of row 6 came down. What about row 7? They came down. Doge was particularly hard hit. The memes have been hard hit, and we're seeing a little bit of a recovery in Bonk at the moment. Now, why do we look at memes? Because they're pretty much the gateway for retail investing and trading. So that's pretty good to look at. Also, a row 1 reference that you want to keep on your radar is the volatility. Now, these charts are not marked up, but they do give us a bit of a directional understanding. We can see that the VVIX, the volatility of the volatility, that came up. That's a problem. If we see these particular things go green, we worry about that. We saw that the CBOE, one-day volatility index, actually went down, but it came up so substantially yesterday. Literally the greatest spike that we've seen in half a decade. And we can also look out 9 days, 3 months, 6 months, and 1 year. We've seen them come down, but the 6-month has gone up. Okay, let's look underneath these headlines into row 1. Professionals always stack probabilities. They look at a lot of different charts because they need to understand the market's momentum and direction. When we start to see the VIX spiking up inside row 1, what do we see? We see prices coming down, and the price of Bitcoin has been hit quite hard. Bitcoin is currently trading at 97,804. One thing to just bear in mind, this is upward ascent on the VIX. That means the sell pressure is not abating. Also, we've seen a flight to safety into the DXY. I like to look at this as like people are just stuffing their money into the mattress. There's a lot of mattress stuffing going on right now. When the mattress stuffing occurs, the government says, hey, don't stuff your money in the mattress, give it to us, so the yields go up. That is the 10-year and the 2-year. Rounding up the thoughts for row 1, we can see that their fear in the market has been coming through for quite some time. This is not just the Fed. The VIX was basing and was going to explode upwards. Typically, the institutions look for an excuse and they say, oh, it's the Fed. No, it's them. If you were following the cheat sheet, you already knew about a week ago that there were problems inside not only the crypto market, but also the stock market. This is the power of doing the cheat sheet. Okay, on to row 2. If you're liking the video so far, please smash that like button and don't forget to subscribe. Hit the notification icon as well. If you want to get a feel across all markets, this is the best place that you could be. Row 2 are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. One of the things that you would have noticed if you were doing the cheat sheet is that the junk bonds ticker symbol JNK was actually decreasing for quite some time. JNK can give us an insight into the markets. It's almost a way of sniffing out what the VIX could be doing, and you can see it's dropping off a cliff right at the current time. It doesn't come into any realistic structure until 93.81 in terms of a bounce. This means that negative downside momentum is quite likely, so please prepare yourself for that. we can see that the euro dollar has been coming down. The Aussie dollar has been smashed. Gold is coming down. Silver is coming down. Now, why in gold on earth are gold and silver coming down? Aren't they supposed to be crash resistance? Yeah, kind of. But what you will actually find, as the DXY and the yield spike up, that inverses the potential for gold and silver to come up. You must be aware of these interdependencies and intercorrelations. What are the thoughts for row 2? Row 2 is still under pressure. The DXY is strong and it's strengthening. So that means the euro dollar and the Aussie dollar are under duress. With the yield spiking up, it could mean more negative downside for gold and silver. Please remember, the price is always moving in a wave. It's always going up and down. Don't confuse just a blip with a trend change. And I'll be talking more about this in the Profiting from CTKS Method Structure course that you can get absolutely free. I love the comments in yesterday's video. One of them was, why on earth did things change so traumatically so quickly? It's basically a repositioning by institutional players. For example, when President-elect Trump got the green light that he was going to be president-elect, we saw a huge spike in markets. That was the institutions repositioning their portfolios. They just wait until another thing comes out so that it can happen under the hood. This is why you must watch the news with one eye and one ear closed, because it's intelligent. When we look at the Forex pairs, typically we see this kind of relationship between the euro dollar and the Aussie dollar and Bitcoin. We haven't been seeing that for at least the past month because of the Trump trade. Now we're starting to see normalization get back into the markets. This is a really good thing. It may not feel like it, but it's good. Now, what does it mean for you? If the DXY continues to spike, or the Gopher, dollar yen, or the loonie continues to spike, that is a problem for the markets. The markets are resetting. About time. Getting into row 3, we can see that Bitcoin is matching the trajectory of the major market indices such as the S&P 500, the Nasdaq, the Dow, and also the Russell. Remember that we were saying we saw a little bit of a kick up in the Dow. When you look underneath the hood, that ain't much of a kick up. In fact, the overwhelming trajectory of these particular indices is downwards. Now, that doesn't mean it can't find structural support and bounce, but what it does mean is the momentum is to the downside at the current time. So a lot of people will be buying the dip, and the dip will keep on dipping, and they will have no idea why. We know that Bitcoin cannot escape the stock market's gravity. So if the S&P 500 futures are coming down, guess what's happening to Bitcoin? If the Nasdaq futures are coming down, guess what's happening? You can see it playing out in real time. Unfortunately, people don't believe this is true. Please don't be one of those people. Just look at the charts, they will tell you the truth. The news will just tell you a story, and not necessarily a real story. It could be a fantasy. Row 4 is where we look underneath the major market indices into Apple, Microsoft, Nvidia, and Tesla. You remember when you saw the headline figure for Apple, it came up. And also Nvidia came up. But I ask you this question, does this look like constructive price action to you? Not really. And when we look into MicroStrategy, which is row 5, and Coinbase Global, I've just put it here. If you would like to see another stock in here, please let me know. Just pop it into the comments. I only have space for one. But what we're seeing inside row 4 is that major sell-off occurring, and that's because of the VIX and junk bonds. The VIX and junk you need to keep your eye on, and also the DXY is becoming exceedingly important. When we look into row 5, which is the crypto market, total crypto market cap, Bitcoin and Ethereum, MicroStrategy we just covered, we can see total crypto market cap has been coming down. And I anticipated this yesterday. A lot of people said it's not going to come down. Unfortunately, it is coming down because of negative momentum. But I would expect that negative momentum to actually start to wane over the next couple of days, and we may well see double-digit negative losses followed by double-digit positive gains. This is the way the markets work. And we can see total crypto market cap coming down, Bitcoin coming down. It's currently 97.2. Ethereum currently 34.41. And total crypto market cap, excluding Bitcoin and Ethereum, so this is basically all the alts, has been whacked quite substantially. What is the cause of this? It's not the Fed. It's the charts. If you understand that the truth is always in the charts and the news is just a story, you've got the reality of financial markets. And you've joined a mythical 1% club, because unfortunately not too many people understand that. We're seeing negative price momentum, but don't forget, negative doesn't mean that we're not going to get retracements, but it means that we have to look for a trend change. We're not seeing that right now. So the probability is the dip will keep on dipping, but don't freak out. Level 1 and Level 2 standard certification draw what are called Stanfield levels or CTKS levels. You'll see these on the charts that I'm going to show you next. Thicker is always stronger. The definition of Stanfield levels or SLs, they're also known as CTKS levels. They represent the most statistically significant levels where smart money will buy or sell in the future, and thicker is always stronger. These are formed across all of price history in strict accordance with Level 1 and Level 2 standard certification from CTKSmethod.org. Service members get 32 trading view charts with structural indicators and monthly price paths. Row 6 is all about looking deeper into the crypto market. We're looking at Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. Litecoin and Bitcoin Cash give us some insight into Bitcoin. Ethereum Classic gives an insight into Ethereum or ETH, and Binance Coin gives us an insight into the health of exchanges, centralized exchanges. We can see everything is in a downtrend. There's no sign of a trend reversal at the current time. The predominant trend is down. That doesn't mean you can't make money out of it. If you buy correctly, you can do really, really well, but you have to know how to buy and to sell. The memes are really important to look at because they are the gateway for retail traders and investors. And retail investors are just emotional traders. Now, what does that mean? It means basically that if you're selling on red and you classify yourself as an investor, you're actually a trader. As your trading and investing coach, it's really important to understand that when your emotions get the better of you, it just means that the analysis hasn't gone up front. For example, if you were looking through the cheat sheet, you saw the VIX starting to base, you saw junk bonds starting to cut under, you would have been releasing your weights inside the market. That is scaling down, locking in profits. But a lot of people simply can't do this. They don't know when to buy and they don't know when to sell. In the Profiting from CTKS Method structure, I'll give you some very, very good insights into how to look at charts to buy and to sell. If you want 100x's, there's a lot of different ways to go about it. And you'll find, just as our community understands, you don't have to make big percentages to make huge gains. We can see, even though there's negative price momentum on Doge and SHIB and Pepe and WIF, what we also see is Bonk is starting to recover, and often the memes will recover first. They're really good for you to look at. Where could things be going to next? One of the things to just bear in mind, the S&P 500 has sold down, and it's sold down quite substantially. We're breaking below this low because you saw that the VIX is starting to come up again. A lot of people will look to this area and say, oh, there's support there. Actually, if you look from a structural perspective, looking through the CTKS method, structure, level 1 and level 2 standard certification, there is literally no structure here. It's way down here. Just to give you a little bit of an understanding, you saw just below that 6100 level, there was a lot of overhead structural resistance, and that failed. When it failed, it was a big problem. A lot of people will be buying the dip right around here because retail looks for these recent levels of lows and recent levels for highs. This is what the institutions use to crush retail. Retail pays very, very high knowledge taxes because it's not these areas that are important, it's these areas with a lot of structure. You can see down here, we're getting into an area right here where there's actually structure. And down below, down here, there's even more. Now, what does this mean? It means that the S&P 500 could retrace a little and just suck more people in as it dumps down further. Always remember, price is always moving in a wave. So when you think about these things, you need to be aware. It is structure that determines everything institutionally. When we look at the Bitcoin capitulation indicator, we can see that the VIX absolutely spiked down. And one of the things that this typically does is it pulls Bitcoin eventually down with it. You can see that there are times because of internal market momentum, that Bitcoin will go in opposite directions to the VIX. But that doesn't mean over time that the VIX won't win. This is very important to understand. A lot of people would say, oh, I wish I bought Bitcoin at say $50,000. Well, if you get the opportunity, will you buy it? Or will you be running away from the market? If you're retail, you will run away from the market. If you are professional, you'll buy it. That is the difference between the two different camps. It's really unfortunate to say, but you cannot think from a retail perspective. You must think from a professional perspective if you're going to be more of a financial and emotional blessing to yourself and those you love. What we can see here in terms of Bitcoin, this sell-off has literally just started. If we get more negative price momentum, and the VIX is the major determinant of that at the current time, if we do, we could see fairly sizable falls in Bitcoin. Now, a lot of people don't like me talking about things like this, but hey, the facts are the facts. We don't care about price falls. We want to get into them. They're enormously good buying opportunities. Professional investors and professional traders have no concern about price coming down. And all we do is to buy long at spot. We're not shorting anything. To understand where the crypto market could go, it's very important to look at total crypto market capitalization. We can see at that 3.42 trillion, we lost it. We had a structural failure here. We had a structural overshoot down to the 3.3 trillion, and we're just literally rebasing to that at the current time. If the bears get their way, which means the VIX keeps on spiking, moving down into the 3.17 trillion is definitely on the cards. If the VIX starts to back off, we would attempt to challenge this 3.38 trillion and even get up to the 3.42. You must have three-dimensional thinking on where price could go. It's really important. And the most important thing that you can ever do is to look at the structural levels. They're your safety nets and they're your ceilings. When we looked at Bitcoin in the last video, it was just down here. What I've done is to just leave these price labels on in terms of the structural indicator. And you can do a very similar thing by just grabbing a text label and just putting it across the indicator from the service. Now, one of the things that we've noted is all price is structurally bound. Now, I'm just going to pop on the indicator for you and give you a bit of an indication as to what is actually happening structurally. At this 104.185 level, that's a lot of structure. That failed, and we tried to come back and retest it, but we failed dismally, absolutely dismally. When you get a negative structural failure plus an overshoot, it favors lower structural levels. For example, the 99,934 when price was here, and the 100,871 mark. You can also see that we structurally failed at the 99,934, which put lower structural levels in play, the 97,180 and the 95,786 level. So what you can see is that these levels look to the right. We're actually looking to the right of price right now. I'm going to change these labels. I'm just going to move them across so you can see them more effectively. Okay, that's a little bit better. Now, what are we noticing here? some degree of buying pressure is returning to the crypto market. We've entered a positive CTKS gap because price can move up very, very quickly, and there's no internal resistance to stop it until 99,934. And you might say, Ken, why are you talking about positive price action? Everything looks negative. Yeah, sure, but intraday things can move around quite a lot. You can see here, you can see there, you can see all of that. There is a lot of money to be made intraday. Even if the market continues to fall down, it means absolutely nothing to us as well. One thing that we need to just bear in mind, we're starting to weaken, starting to get sell pressure entering the market. So this is currently favoring the 97,180 mark. If we structurally fail there and just cut through it, we favor the 93,684, and the 92,732 looks realistically quite strong. The dip buyers will be out in force, so please bear that in mind. They could rally it up to the 99,934. If they can't get above, we're coming back to the 97,180. The critical levels to look at right today, 97,180 is the key line in the sand. We make our money by going long at spot. In other words, we just anticipate that the price will come up. In order to make money from that, you must know your levels, and you especially must understand how momentum works. That is, the concept of structural failures and structural overshoots is quite important, and I'll be talking about those inside the Profiting from CTKS Method structure to be released on Christmas Day. What a present! And you can get it absolutely free from ctksmethod.org. I'd like to show you something from inside the course. Rule 271, you do not have to make big percentages to make big percentages. A lot of people are chasing the 100x, the 50x, the 20x, never understanding how to actually calculate an x in the first place. The focus of our community is to turn small percentages, but to do it frequently. If you could do just 1% per day, you would make a 37.88x return, and that is a pretty good return. You could grow $100 up to $37.88. If you manage to turn 1.5% each day, and this is possible, you could get a 230x return. What typically happens, investors just say, I'm going to hold on for dear life. But the problem is they're generally brought in at the top of price action and they ride it all the way down to the bottom. Therefore, a much less risky scenario is to just make small percentages and just turn them over more frequently. You can make larger X's by turning over higher percentages. The Profiting from CTKS Method structure is focused on skilling you up to do things like this. And you can see in a downward market, we've got plenty of price waves that we can ride. It comes down, then it goes up, and it comes down, then it goes up. It's so long as you know where the structure is, you can make a lot of money. And you don't have to be freaked out and have knots in your stomach about seeing your investments just evaporate. And it's perfectly suited to down markets. And of course, a lot of the actual examples that I give are when price is descending down. I believe that anybody can make money in an up market, but it takes a huge amount of skill to go long at spot in a down market and make significant funds. That's what I'll teach you inside Profiting from CTKS Method structure. Have a great day or night ahead, my friends, and Kate and I will look forward to catching up with you again in the next video. Bye for now.